The official cash rate has kind of not dropped as low as we thought it was going to drop, but interest rates are climbing again. Okay, well, who does that actually benefit? Well, it benefits savers, right? So it benefits people who don't have a mortgage, who can go out and keep spending on stuff. That's not your average New Zealander. So I just think if you really looked at the data hard, I don't think the average Kiwi is better off. I don't think there's a lag. I think unemployment's rising. I don't think people are feeling secure in their jobs. I think it's still really tough out there.
We are back in your life, and today, mortgage arrears, they're on the rise. Mike, I want to talk about what's really going on. So right now, more than 22,000 Kiwis are past due on their mortgage. We haven't seen these levels since the pandemic. My guy, what's going on?
Yeah, 22,000 mortgage accounts in arrears at the moment. That's up 7% year on year. So that's a pretty big jump. For just loans and debt in New Zealand, that's up 1.3% per year. So you can clearly see that people are choosing not to pay their home loan over other debts, which is, again, not good.
It is interesting, right? Because your boys have been going, it's getting better. 2026 is looking better. Interest rates have come down dramatically, but yet people are still struggling.
Yeah, they are. I mean, there's no real surprise there, right? Like you think about the environment that we're in the moment. And there's a ton of factors that contribute to this. We'll cover some of what we think are the main ones today. But yeah, it's tough times out there.
So let's look at a couple of these numbers in a little bit more detail. So as you said, 22,000 Kiwis are behind on their mortgage, but around 470,000 New Zealanders are behind on loan repayments, which is outside of just their mortgage.
Yeah.
That's a lot of people behind on their debt, Mike.
It is. And again, like I sort of said, that's up 1.3%. So, mortgage delinquencies are up 7%. So what that actually means is people are choosing not to pay their home loans and instead of paying other debt. And to a degree, I can see the logic, which is like, if someone cuts off my credit card, I'm not going to have money to spend, I can probably like try and work something out with the bank. Cause it's that old adage, right? Like if you owe me $100,000 and you don't pay me, I can make that your problem. If you owe me $2 million, that's our problem. You know what I mean? Because I want that money back. So I can get the logic behind people going like, I can probably work this out with the bank over trying to work this out with like a finance company, a credit card company or something like that.
Gotta do what you gotta do to get the lights on.
You probably get Baycorped a lot quicker on a credit card or a personal loan than you would on a home loan. Yep. Just because of the size of the debt.
Yeah. Now, in terms of the age group that is being impacted the most, Ray Dalio calls it the squeeze, 35 to 49-year-olds. Not surprising. They've got mortgages, they've got kids, they've got a lot of responsibilities, they want to go on a holiday. No surprises there?
Yeah. I mean, I don't even think it's the holiday thing. I probably wouldn't bring that into it. Like, it's 35 to 49-year-olds because like you sort of said, they have kids. They're potentially down to one income at some point. I don't think these people are out buying holidays. Like, you think the amount of cost increase in food, fuel, necessities, and then in a household with say 3 kids, that percentage increase, that's going to be a lot of dollars.
I get there will be a lot of people in that situation, but of those 470,000 Kiwis, you don't think there's Kiwis buying stuff that they shouldn't be buying?
Oh, I'm not saying there's people not buying things they shouldn't be buying. What I'm saying is, though, I think it would be particularly mean, like in a literal sense, to be like, you guys are out there buying holidays. You guys are out there buying Rolexes. I don't think that's the case, man. Like, I think people have like, there's a lot of talk in the media, like, it's getting better. The economic data is going this way. So what? Like, for the majority of people, it's still bloody hard.
Yeah, I mean, boomers, they go, the only thing you need to do to buy your first home, stop going out for brunch and buying avocado on toast. I don't know. I think it's probably a bit of a blend between the both, right? I mean, we've seen enough people to know that some people are good with their money.
I don't think it's a bit of a blend, man. I think, don't get me wrong, there is a small percentage of people who are bad with their money and are buying holidays overseas. But like, of the clients I'm seeing, it's not a lot of holidays, man. We can agree to disagree.
We can.
I
think it's good to disagree.
Yeah, I definitely think there's a segment of society who are bad with their money and who are just like putting their head in the sand and running into a brick wall faster and faster. But Yeah, for the majority of people, I think they're just struggling.
We'll have to look at some more data. One other piece of data, though, which is probably having a huge impact to this, is unemployment. So it has risen to 5.4%, New Zealand's highest unemployment rate since September 2015. Mike, you were still in your 20s back then. That's a hell of a long time ago.
Yeah, it is a hell of a long time ago. Yeah, like, again, economic data, like you can point at data in the economy and say things are getting better, but like this is a really clear indicator that it's not.
I mean, I look at what's happened with the OCR, that, how much interest rates have come down. I look at that there's, sentiment in some pockets is improving. Do you think there's just a bit of a lag on unemployment and these mortgage arrears numbers, and that they will be getting better maybe in the back half of 2026?
No, I don't think so at all. I think that certain sectors of society or certain pockets of the country might be doing slightly better, but for the average Kiwi, and I'm saying the average here, I think they haven't seen much improvement at all, right? And if we cherry pick the data to say it's looking good, you can say, yep, GDP's up across the country or something like that. But if you actually look at it, it's farmers, right? It's people exporting meat, basically. They're going to be doing really well. And you'd be like, oh, well, that'll drip feed out into the economy. Okay, yeah, so a farmer gets 2 coffees a week instead of 1 coffee a week. Like, that doesn't mean anything practically, right? And then if I go, and then if I go, okay, well, it's getting better for some people in the economy, right? Like, the official cash rate has kind of not dropped as low as we thought it was going to drop, but interest rates are climbing again. Okay, well, who does that actually benefit? Well, it benefits savers, right? So it benefits people who don't have a mortgage, who can go out and keep spending on stuff. That's not your average New Zealander. So I just think if you really looked at the data hard, I don't think the average Kiwi is better off. I don't think there's a lag. I think unemployment's rising. I don't think people are feeling secure in their jobs. I think it's still really tough out there.
What's going on today, Mike? You're dressed all in black. You're giving like down vibes of just like, it's.
I'm not giving down vibes. I just think I'm giving a realistic point of view for most people, right? And like, it's really easy for us to sit here and go, it's people going on holidays, or the numbers say it's getting better, or, GDP's increased by this. Why isn't everyone feeling better? Man, I don't think that's the case. Like, for someone who's, 2 parents working with 3 kids, and like the situation's not getting better for them. Interest rates aren't low. You know what I mean? Like, historically speaking, yeah, they're a bit under average, but historically speaking, people have much lower debt to income ratios than they do now. If you bought in 2021, you bought at the peak of the market, again, you're both working, you got 2 or 3 kids, like, hey, like, you need that interest rate to be much lower than this before you're actually feeling like you're going to go overseas again.
Yeah. Look.
And just to compound, people are leaving in droves.
That's a good point.
So tell me I'm wrong.
I think it's Northern Territory stealing our electricians. Somebody's got to look at that.
Yeah.
Look, I get what you're saying. I do think that there is definitely pockets of people out there. The example of a family of 5, of course, I don't know if you know this, Mike. I got kids. Kids aren't cheap. I get that whole thing. Mortgages, they're bigger than they were in the past. It's tough. I just thought 2026 was going to be better.
Look, we all did. And mainly what we were hoping mainly what we were hoping for there was that interest rates would come down a little bit more, right? And it would stimulate the economy a bit. Because you think about it, for that family of 5, that family of 4, the big expense is that debt. And yep, you can say the official cash rate has gone down 4% in the last, whatever months. Yeah, home loan interest rates didn't really get that low, all things considered, right? And you've got some economists out there going, you overcooked it. You dropped them too low. You should never have gone this low. Inflation's going back up. I don't know, man. Drill into the data. The inflation stuff, I don't know how people are meant to stop spending on electricity or stop spending on fuel or stop spending on rates. Yeah, we can cut our insurances if you really want to nothing, but then what,
Yeah. And if you try and get back to a number that somebody has decided is good for the economy in terms of that inflation around 2%, that means that all the discretionary spending that grows the economy, that has to go backwards for us to break even. And it's like, well, does that make sense in 2026?
And then I think what compounds it particularly this year is that you will get, because it's an election year, you'll get the government coming out and going, look how much better it is. Look how much better we've made it. Look at these 3 or 4 key pieces of data. Yep, unemployment might have gone up, but GDP's, that's really strong. Or you can cherry pick data to say just about anything you want. Politicians, the absolute masters of it, right? And I think that's almost like a bit of a slap in the face to like your everyday Kiwi out there, being like, really, man? Like GDP's up? I don't feel that GDP's up.
I like the spicy mic, eh?
Oh, I just don't think I'm even being particularly spicy. Like, I can dial up the heat. We can go like Vindaloo if you want. We're at like a medium butter chicken at the moment.
Yeah, you can't go medium butter chicken. You cap out at a mild butter chicken with a garlic naan.
Butter naan.
You can't handle the garlic.
I just don't like a garlic naan.
Too spicy for him. Okay, let's talk about another stat. The average credit card debt in New Zealand hovers around $2,500, $3,000 per card. You ready, Mike? That's $6.3 billion in total outstanding amounts on credit cards in New Zealand.
Yeah, and I had thought that actually this average balance might be trending up, but we checked the data and it's not. It's kind of stayed flat to trending down a little bit. But where I think I might be a little bit right there is that you can see the difference in what people are choosing to pay back. People are choosing to pay back their credit card, only like roughly 1.3% of growth in delinquency on credit card, 7% growth in home loans. So to me, what that says is people are going, I can ride my home loan being in arrears longer than I am willing to go, I'm going to turn off the tap of like stuff that I can spend, right? I need that credit card. I can probably ride this out at the bank for a couple of months.
So I guess the real question becomes, can people actually afford this debt? Because I mean, whenever borrowing gets cheaper, more buyers jump in. But if households are already feeling stretched, are we at risk that the country is just taking on more debt than it can handle?
It's a good question, and boy, do I have a cracking answer. And we're going to get into that after the break. Your mortgage structure matters just as much as your interest rate. If you've got a fixed rate rolling off soon, or you're wondering what you should do, get in touch with the team at Lighthouse Mortgages today for some personalized advice. Now, back to the episode.
So Mike, if households are under pressure, what's going to tip the balance?
In a good way or a bad way?
Probably bad.
It'll be if the OCR goes up and interest rates follow it going up and everyone rolls off these relatively okay rates onto higher rates again, I think you got a real risk of the country. I think we're kind of getting into stagflation. I think we're getting into a real risk of stagflation.
Oh, I'm so sick of this. And follow-up question, what has recently happened to interest rates and what do you think will happen to the OCR?
Yeah, cool. So interest rates have been climbing since the back end of last year. The official cash rate hasn't climbed since the back end of last year. It hasn't climbed for some time now. But we are seeing long-term interest rates go up. And we're seeing short-term interest rates jump around a little bit.
So the thing you are worried will be the tipping point appears to be happening.
Well, the official cash rate hasn't gone up yet. I called a hike because it's really clear within their mandate that they need to hike. But again, they might take a more long-term view and go, this is just a short-term piece of data. One data point doesn't make a trend. And they might go, we'll just see if this curves back down again. Because consumer spending hasn't really been that strong.
No.
Boxing Day sales were a bust. The only thing that really popped off was Black Friday. And I think that's just a whole lot of people trying to buy Christmas presents really cheap. Wasn't huge spending over the break. So yeah, I think I'm calling a hike. It's probably 50-50 whether or not they do anything. The stagflation is the real risk though. If the country gets into stagflation, the only way to get out of it is you really need to choose what's the shit sandwich you're going to eat. Are you going to eat inflation or are you going to eat unemployment? I would probably pick a little bit of inflation over unemployment. Otherwise, you're just going to be dragging us through this for longer.
And a quick 101 on stagflation.
Stagflation is when unemployment is rising, inflation is rising, so costs are going up at a relatively quick rate, but your growth is going down. So you get the worst of all the worlds. Yeah.
If you want us to do a episode on stagflation, pop it in the comments and maybe we'll get our boy Jared Kerr to come and join us as well.
That'd be good, yeah.
When it comes to the whole which of the evils do you pick? Once you break down that inflation number, you would have thought that's the one you would choose to tolerate and you go after unemployment.
We would think that because we're biased towards that direction, but we're not reserve bankers and we're not economists, right? So
Well, they're wrong most of the time anyway. So.
So
And the arrears, it hasn't done much better.
Yeah, but like this is the thing. Like again, it's their job. I mean, let's see what they do. I have no idea, man, how you'd kind of get out. But again, I might be overreacting from one data point, right? They might take a long-term view. It might come back down. GDP might go up. But so again, it is a little bit worrying, but the signs are definitely there. We could kind of slip back.
I guess one thing that is interesting, Mike, I'm just, thinking out loud is, as a financial advisor, I definitely only talk to a certain part of society, but not all of my clients are earning like mega bucks, and a lot of them are choosing to keep their mortgage repayments at the same level so they can pay more principal, less interest. Do you think it's just the part of society that, particularly on the wealth side I engage with, is those people are doing all right, but it's actually those people on, slightly lower incomes that are the ones that are really struggling?
Yeah, we do see that a bit as well. But quite often when I'm talking to customers, depending on what bank they are, it'll be how quickly they can reverse that if they want to. Some banks, you can just raise the payment and drop the payment. Other banks, you can increase your repayment, and that decreases your loan term. So if you want to decrease that, you have to apply to increase. As soon as I say that, they're like, nah, don't worry about it.
Yeah.
You know what I mean? Like, so people are still a little bit cautious. And I'm like, I'm not saying it's doom and gloom for everyone. I'm just saying that when people highlight stats to go, it's all going great, it's all really rosy, all this stuff, like, I just don't think that, I think it's quite disingenuous, really.
No, I challenge you on that. I am an optimist.
Yeah.
I want to look into the future and go, it's going to get better. I want to look for the data sets that are going to make me feel that it's going to get better.
Yeah.
Because at some point, it has to get better. The only thing is the law of averages, and it feels like it hasn't got better for a while.
Does it? Does it have to get better? I feel like this is when people are standing in front of a roulette table and it's rolled 6 blacks in a row and they're like, it has to go red. Does it?
Well, it doesn't have to go red on the next roll.
Yeah.
But statistically, it will go red.
But it could be 6 more blacks?
It could be.
Yeah.
Which means that at some point, and you look at it at a probability perspective, right?
Yeah.
The chance of your first coin flip being tails is 50%.
Yeah.
Once you get to 7 or 8.
No, it's still 50%.
On that individual coin flip.
Yeah.
But if you look at the data set over a full period of time, the longer you roll through, it's just stats. You can't argue me with the data. I know you're saying with the next specific coin flip, it's a 50-50 probability. Yeah. But if you go over a long enough period of time, the law of averages, you can't argue with the law of averages.
I think you're using the wrong example, but yeah, you can't argue with the law of averages. Anyway, James, I think you're wrong. What can we do to kind of better the situation, right? That's the big one.
We can focus on the things we can control. It's about actually breaking it down and going, in the first place, what level of debt am I taking on? And, is it a reasonable level of debt? There's some people that have been like, I'm sorry, you're going to have to downsize. You should have never taken this debt out in the first place. And actually, you've got to look to move into a smaller home and make it work. You've got to look at your income and going, what can I control? Life is a hell of a lot easier with more income. What is my plan with my career or my business? And how am I going to grow my income over time? What's happening with my budget? Am I like everybody else where I go like, well, I make good money and I don't go out for dinner every night, but it all disappears. That means you don't know where your money is going. And then having a clear strategy of how you're going to pay down debt and grow your wealth, and accept that silver prices are not going to fix all your problems, and you've got to be consistent over time and accept that building wealth is slow.
Huge volatility in the commodities market at the moment.
Crazy.
Yeah. I think the other thing as well is like, if you do have a mortgage, getting some advice on the structure, and not all the advice can be right all the time, but if you hedge your bets a little bit and go some long, some short or something like that, depending on your situation, that can really help to ease the pressure as well.
Yeah. And I mean, you look at the unemployment example as well and go, okay, well, if I lose my income, that's a pretty big deal. That's going to be hard. Yeah. That's why you need an emergency fund. Because if you live life just going, it's all going to be fine and I'm just going to be able to continue doing what I'm doing, I think sometimes life doesn't go as planned, right?
Tell me about it.
Cool. All right. We'll wrap it up there. Mike, maybe we'll have a talk about this afterwards. Let's not just be realistic. Let's look for some optimism in the future. If you want us to do that episode on stagflation, just pop it in the comments because I'm keen to do that. Make sure to review, subscribe, give us a like, and we'll catch you next time.
Getting staggy with it. Cheers.